If a door is open, does that make it an entrance or an exit? Well, as a trader, we must know when to get in trades and where to get out of them. When you look at a chart, you should see more than just red and green candlesticks. You should see areas where doors have been open for traders and areas where they have been closed and money has been taken off the table. Okay, so let's take a look at a few charts. Let's start with Zeogenics and see if we can determine if there was a plausible entry and exit for a trade this past Friday. We're going to let's switch to a 5-minute chart and see what our eyes actually tell us. All right, we can look from the chart and tell there was a gap up. You see, we have a low down here at $12. It gapped up Friday morning all the way up to 43.65. Then we got a slight pullback, which is this is more than likely just people taking money off the table, people taking profits. You know, if you go from $12 all the way up to 40 something dollars, you would take money off the table. You know, start to secure some of that risk back. So when the bell opens, we should get a what? We should get a liquidation break, because all these people who got long overnight, or even some of these people who were holding into, you know, Friday's morning open, they want to take some money off the table, and that's what we get. First candle is a down candle, then it continues, but it's not dropping at a fast rate. Meaning, if the stock right here opened at 31, and by 10 o'clock it's only at 28. All right, that's not dropping that fast considering how big of a gap this is. So what does that tell us? That tells us, hey, this is not, you know, sellers really coming into the market or coming into this stock, pushing this stock down. It's more or less just buyers shortening their position, you know, taking some money off the table. So as time passes on, we should start to see what? A consolidation area. And this consolidation area should spark your interest. It should tell you, hey, sellers are not in the market. Buyers have just taken money off the table. Buyers and sellers are not equal. The stock is not getting any lower. However, we have formed an area of support. You know, this $27 area is an area of support. So at areas of support, a door is being opened for you to place a trade. It's being opened for you to actually enter in a position that is a plausible entry that should actually take the stock higher, because you're not the only person seeing this entry. You know, there's thousands, 100,000 other people or computer algorithms who will see this entry and actually place a trade. So what is your entry once you see an area of support form? You're looking for price to make a new high. All right, so we should say, hey, if price goes above 29.42, we want to look to take a long position. Do we ever get that? We finally get it right here. All right, so price breaks above 29.42, right? Okay, think of it this way. Just because you have a door in front of you, you still need what to open it? You still need a key to open that door. The door is locked. You know, price could not break above this 29.40, 29.50 area. So that means the door is currently locked. What is the key to opening this lock? The key is volume. Down here, look, we get a volume spike. Therefore, other buyers are stepping into this stock. Other buyers see, hey, price is actually getting stronger. Buyers are stepping in. Demand is increasing. As demand increases, supply, or the float for this stock, the number of shares available to trade, is decreasing. So this volume is your key to unlock this door. This volume tells you, hey, you know, what your eyes are seeing is correct. Buyers are stepping in. So this is a viable entry right here above this 29.42. This is a viable entry to go long this particular stock. And as time passes, other people start to step in. As other people start to step in, demand continues to increase. As demand increases, boom, now you have an area that has broken the opening high right here at 32. Price has now broken the opening high. That means this stock has now turned positive on the day. Other people, other algorithms, other investors or traders see this potential as a spot where they can actually buy in more shares or add to their position. So you've got in down here around this 29.42. We got an area of support right here, this $30 area. Okay, you can take profits off the table, meaning you can now lower your risk. Right here, when you first entered this trade, you were exposed to this stock dropping, but now you're no longer exposed. Move your stop up, take money off the table, and as it continues to go up, continue to take money off the table until you feel, hey, at the very top, this is an actual area where, hey, buyers are no longer going long this stock. Volume will start to decrease, and I want to exit the trade completely, which we get that right here. This entire area is an area that could have been the end of your trade. You could have held this stock from 29.42 and rode it all the way to this area, this $36.80, $37 area, until you get this big red candle, which tells you, hey, the trend, this uptrend, is now changing. No longer are buyers stepping into this stock. This uptrend lets you know, hey, people are taking profit. The stock could go back lower. Go ahead and take all your money out. So what did we see? We saw an area of neutrality between buyers and sellers, which formed this area of support. We knew going in that the stock had gapped up overnight, so we should get a liquidation break at the very beginning of the morning. We got that right here. The stock settled and gave us a valuable entry. We got our key, which is increased volume right here. And then we get our trend. Once trend is broken, the trend is broken, that's our exit. So that's how you could have traded, ZGNX. There's also another entry you could have taken to be more conservative. And let's take a look at it on a 15-minute chart. So if you look right here, you see a rounded bottom formation, or a U shape, meaning you got this down area right here, you got this flat bottom, and now it's running back up. So you can call it a U shape, a rounded bottom, whatever, it doesn't matter. At the top of the first candle high of the day is your entry. If price passes back through that top with increased volume, you have a plausible entry for a long position. Did it happen? Yes, it happened on this candle right here. We got our volume spike, we got our key. This is this area of resistance was the door. The door was open by other buyers stepping into this stock, giving us another entry. So not only could have you could have gotten in around 29, this 29.50 area. You could have gotten in right here, right above $32, and then rode it all the way up to this area of resistance where trend was broken, volume increased, and taking profits. Let's take a look at another one. We'll take a look at HMNY and see if we can find an entry and exit. Entries and exits make you profitable. You don't become a profitable trader just because you trade longer or stay in a stock longer. You become profitable by getting in at the right time and getting out at the right time. All right, so we see on Thursday that HMNY had this resistance level around 11.15. It could not break at the end of the day, closed around $10, and overnight it gapped up, and we have an overnight high right here of $12.50. Actually, let's change this to a 1 minute. On a 1 minute candle, we have this big spike above the overnight high, We also have, this big push down. You should never trade this first 1 minute candle. Let the market breathe. As time passes, you will get a sense of the direction that this stock is going in. We know this is an area of resistance overnight. We know where our previous day's support is. So hey, let's see what happens. Our trigger is going to be if a door is opened above this high and it actually closes behind us. When we're going long, we need a door to close behind us, meaning it traps us above that area of support. We want to stay above that area of support. So even though price broke above this area of support, it never closed. So the door stayed open. The door stayed open. There's no trade to be taken. If you go long here, you're going to start to feel this pain as this stock continues to fall. Your stomach is going to start to turn, cut flips. You're going to start worrying, and finally you're going to get stopped out down here for a loss. That's why I say, hey, let this 1 minute candle form. Don't get too excited. Hey, it broke above the overnight high. Yeah, it might have opened the door, but it never closed the door behind you. So we continue to sit on our hands and we wait for a close above the overnight high. Do we ever get that? Yes, we finally get that close above the overnight high, which is great. But what we did not get is confirmation. We did not get that key that we actually needed. Why? Because volume is still light. Volume actually is lighter on this candle than this one. You got 74,000 shares traded here and only 53,000 here. So the only thing this candle tells you is pay attention to this stock. Your antennas are up. Go ahead and get your order ready, but do not pull the trigger. You need better confirmation. Your better confirmation comes on the very next candle. The very next candle breaks above the first 1 minute high. We also get our confirmation in volume increase. So this is our key. Our key is getting in above this 1 minute candle. It's high. Even though it broke the overnight high right here, we did not get any confirmation. This is our confirmation that this level of previous resistance has now turned into support. So we enter our trade here right at 12.28. And as the stock pushes up, we take profits off the table. So if you get in at 12.28 and you have 1,000 shares and now it's at $13, take half off. Go ahead and sell 500 shares for 70 cents a share. That's a nice profit. As it continues to go up, sell another 200 shares. And then when you get this first pullback, put your antennas on alert. You have moved your stop up to break even. On your last, let's say you have 250 shares left. You've moved your stop up to break even, so you no longer will lose money if the stock pulls back. You've pocketed, a little over 750 shares. You pocketed a little over 70 cents on that. So you're good. You're in the driver's seat, because what happens next? The stock breaks down. And as it breaks down, it hits your stop, and you're stopped out of that last 200, because you do not know, hey, the next candle is going to be a red candle. You don't know until you see it. But once you see it, you know what to do. You either you let it hit your stop, or you sell out as it's breaking down. Take profits again as it's breaking down. You can sell again, right? You can sell this last 200 right here at 12.46 and pocket another 20 cents on that last 250 shares. So once again, we need confirmation. Confirmation comes from volume. Volume is just a fancy word. Hey, people are buying or selling this stock. They are buying it up or they're selling it. More people are coming in. More people see it. As more people see it, the stock continues, or the stock will actually start to move in a certain direction. Let's look at one more. We'll take a look at IZEA, and that should complete this entry and exit for beginner traders. And it should help you be more successful in your trading. So let's take a look at IZEA. All right, so let's say all this price action has taken place and it's now 11:45. You were not able to get in on these moves. You did not see the stop. However, your eyes are telling you what? Your eyes are telling you we have an area of support down here, right? All this is an area of support. Price did not close or break below this area. We also have an area of resistance. Where's our resistance? Resistance is right here at this $7 area. So we already know two things. So if we already know these two things, we're ahead of the game. You know, you're ahead of most traders if you can look at this chart and see this is an area of support. This is an area of resistance. It's not an exact price. You know, it's an area. So as time passes, we're looking for two things. We're looking for a break above this area of resistance or a break below this area of support. We need those two things before we enter into this stop. What do we get? What happens? All right, price continues to move and we get this candle. So we start to see it going up. And we're like, okay, well, it may go long. Let's, you know, shift our bias from neutral to long and see what takes place. We got a volume increase a little bit, but price has not broken this area of resistance. The door has not been opened. We have not received a key yet. The very next candle, we get our key, which is our confirmation. Volume increase. Other buyers are stepping in. Other traders are hitting a bid or hitting the ask, I should say, and they're placing trades. So boom, we get it. Enter a trade right here above $6.99, you know, $7, $7.01. Enter a long position. So this very first candle, you get in at 7. Now the stock's up to 7.13. Phenomenal, great trade, great entry. You know, now what's your next responsibility? Your next responsibility is managing your position, taking money off the table. So as the stock goes up, take profits. You know, you getting in at 7, now it's all the way up here 7:30, 7:37. Take some money off the table, put money in your pocket. You know, don't just leave it out there. I know some traders do and it works for them. If that works for you, by all means, stick to it. Stick to what works for you. But for a beginner trader, you know, learn to take profits when you can, because some days it may be hard to come by. But you can get used to seeing money coming into your account. You can get the feeling that, hey, you're doing a good job. You're doing the right thing. So price pulls back a little bit. We're able to move our stop up. Now we got our, you know, we have our stop around 7.14. We take more profits up here at 7.40. As price moves back again, we move our stop up a little more. We get a high confirmation that, hey, price has hit 7.63. This sparks your antennas again. Hey, this high might mean that this stock is overbought. You know, people may start to clear out their positions. People may start to shut the door on this stock. Lo and behold, what happens? They do. They shut the door and price drops. Well, if you moved your stop up, you should be out of this stock at 7.25. So all in all, you know, you got in at 7, you took profits around 7.30, took more at 7.40, took more at 7.60, and closed your position again for good at 7.25 area. So that's how you enter and exit trades. You know, keep your plan simple and stick to that plan. You know, do the same thing every single time. Find areas of support, areas of resistance. Look for confirmation that the price is actually breaking through those areas by seeing volume increase. You see that? That's your confirmation. That's your key that, hey, this door is ready to be open. Once it's open, make sure it closes, meaning the candle actually closes high. So the door is closing behind you. It's locking you in this area. And that's it. That's basic entry and exits. I am the Bearded Trader. I hope this was useful. If you got any questions or concerns, just drop them in the comment section. I will definitely respond back. If there's any other videos you would like for me to make, just let me know. Y'all have a great weekend.